Should be good here. Yep. Alright guys, we're just gonna be doing like Q&A. Pretty chill. Not much people in here anyways, because I kind of had to move my stream like last second. A little earlier. Um, could you explain your daily routine when it comes to the charts? Bro, I literally just wake up. I'm a normal guy. I just literally wake up, brush my teeth, straight to the charts. Literally. I have no like, I'm not waking up at 5 a.m. I'm not going for a morning jog. Nah, dude. Were the longs on NQES valid on Friday around the open? Yeah, they were. Because it does make sense. If we just go pull up indices here. So, this war news happened and whatnot. Melted the market. All assets traded into a low, essentially. This daily low. Pretty much created the whole ADR and overnight. So it's like, this is already a low probability session, right? There was opportunities for sells too, though, in a way, because when I look at this here, especially in YM, you see this very sluggish move up. That's kind of like a retracement signature to me. And then we had some sort of SMT here around the open. This is what I took. So price was expanding away from the open. So it kind of goes back to that driver stream that we had a while back. If I pull it up here, if we were traced prior to a driver, where is it at? If you were traced, look, if you're traced prior to a driver, and you're already in a gap by the time the driver opens up, we haven't yet expanded away. Maybe you put in reversal, etc., whatever. We haven't really expanded. Then I need the driver to expand away from that to kind of confirm that gap or order block or whatever, right? So we're already retraced into the gap, but it's a very large gap. So there's a lot of room for error. We could retrace. You don't know how far it's going to retrace, so you need to be waiting for the open in this type of scenario because it's just going to be really hard to identify, what's, because we could print a candle 2 like in this huge area like a bunch of times. So you need to be waiting for the driver to confirm narrative here to give you a move lower. I'll show you my mistake on managing this position. But yeah, we kind of had that. Another scenario that we could have maybe had is like we print a high in this gap and then you manipulate the high. Now you have like a more refined level. You have like a protected, swing within this huge fair value. That's another, thing we could have had, which is kind of what we get because you have manipulation with the 30-minute high here technically. But do you see how these other assets over here were really struggling to go lower? This is when I should just cut the trade, but I just got greedy, honestly, like, because that happens sometimes. I get greedy sometimes, and I let this trade come all the way back. Kind of stupid, but. So I took this opposing candle, because at this point, if I go to the hourly chart, it's just a fractal model, right? We have this 4-hour candle opening higher, right? And this is a pretty large wick, right? But within drivers, it's fine. Like, this is how I trade drivers. Because there's typically enough volume to, still expand. And like I said, I like these lows, very low resistance move here. Or just like, what's it called? Very lackluster, right? So this is what my trade looked like around here. And I was looking to take it to here. But I should have probably taken it off when I saw this. So if you look here, if I go to like the 30-minute or something, this low that we're seeing, kind of like a relevant low. Go to the 5-minute or the 3-minute. See how we trade into it once and then it kind of failed to manipulate it in a sense. But as soon as NQ trades into this low, price reverses. So this is a form. This is a reversal sequence that I've taught you guys. Maybe I haven't taught you guys, but I posted on Twitter. I talked about it a little bit. But when I saw this, I was like, okay, I probably should have exited this V shape. I really should have exited this position. But I let like 2.5 hour go, and I didn't make any money on this trade, which is really stupid. But so I took a break even here. But once I saw that, and then we had SMT down here, and there's a pretty significant SMT here, um, in a sense. So it's like when I saw the strength switch, basically, where if you look over here, like we're more so expanding here, creating opposing candles as you see, while in Q, the strongest asset, is more so consolidating. You see that? It was staying in this range, where over here, we were just expanding. So that's just tells you that all markets are synchronized, and they will all draw into the same draw in liquidity. And there's only one thing to draw into here, to be honest, and it says high. We're not going to get way up here, you know, at the current high day. It's just not likely. So when you want to trade a reversal day, you have to understand that it's never a guarantee that we're going to go all the way back up here. All right. So what I like to do is I either like to have like a draw in liquidity, maybe a little bit past the opening price. So we can pretend this is the opening price here. Maybe this is a relevant high above the opening price or something. This can be your max draw in liquidity because we know that price is not going to expand much past the open. So what I like to do is either mark out the opening price to the low of the day or the reversal, or the max draw in liquidity to the open price. I would ideally rather get in the lower half here to target EQ and then hold a runner to, like, you know, the open or above here, right? It's much more, since it's already a low probable day, you can't be entering like way up here, you know what I'm saying? So I saw someone's loss that they posted in the chat. That's something that I do mechanically. Yeah, so this right here, it's just too high in the range, right? It's never a guarantee that we're gonna get up here. So I just wouldn't, that's just not how I trade reversal days typically. This is how I trade them. So if you look at here, this is like the relevant high within this range, because the next relevant high is literally the range high, but that's not a guarantee that's going to get hit, you know what I'm saying? That's not guaranteed to get hit. So this is the relevant high that you want to be TPing at. So if you look here, if we go over to YM here. Okay, my charger is like messing up. Alright, so yeah, once I saw that strength switch though, I go to the 1 hour chart. We have the first hourly candle forming the low of 10 a.m. So I can just expect the low is put in, and I can trade this expansion rate. We have an SMT down here. Like I said, it's a significant SMT. And then also, if you look here, I don't know if I've showed you guys this much, but I'm going to show you a little bit now. So this is one of the ways markets become synchronized, and it's a reversal sequence. So remember what we talked about when an SMT forms in the asset that does not reverse. What does that mean? This SMT is likely to be fake, right? And this asset that's lagging will likely catch up and break that SMT, basically. So when that happens, when the lagging asset catches up and breaks that SMT that was once manipulated a while ago on the other asset, this is when this could be a potential reversal sequence, right? This will be the trigger for reversal. So essentially, like, this asset is just waiting for this one to manipulate, and that will be the trigger for markets to reverse or retrace. So this is what we see here, right? So we saw that at the lows. I'll show you NQ here. We saw it with this 15-minute low. See how we're closing beyond it on the 3-minute? You see that we're hitting it way before NQ, and then we're pretty much failing to manipulate it on this asset. It's just waiting for NQ to trade into this low. This is where you want to look for like SMTs and whatnot, reversal signatures, when you see this type of sequence. Because if the strongest asset manipulates, it's the most likely to like reverse, right? And this is, you'll see the other assets like trade through this low. So you see that YM, wherever this low even is at, so I don't even know, dude. It's so unsynced, but that's what I saw. And we obviously reversing, and the weakest asset is showing strength here. So that just tells you that we're going to get to this high. And you're going to see the same thing up here. So this is my trade. So I took a break even over here, right? Then I'm recognizing, oh, I was just wrong or greedy or just bad management, just seeing the other assets. That's just like, this is something I know, like I know I should have cut that trade. But yeah, this is what I took here. And then once we get to this high, this is pretty significant, right? Because it's a relevant high within the daily range. and this is already a expansion type of candle, right? So it's not likely to close up here. Like, you don't know, right? So it's actually more likely to close back within its range, right? So it's not gonna stay up here. So it makes sense to get a reaction here, to be honest, and to potentially go lower. Now, I did not know it was going to go way down here. I did not think it had the volume for that, which is a very volatile day. We're gonna see on these assets. You see how we failed to manipulate this high? See that? But as soon as YM trades into it, what do? We reverse. And this is where we look for SMTs, right? So boom, there's some SMTs around here. Let's go to the hourly close, I'll show you. You have that SMT there. And this is what I traded. And again, I got greedy again because I made some mistakes. Like, I don't know why I'm not taking this asset here. It's because, like, I didn't think it was, I thought this was going to be like a retracement play, to be honest, like to this range. I didn't think it was going to freaking expand like this late in the day. So I just didn't really care what asset I was going to trade because I was just going to TP like 2R or something. But I saw price just so heavy that I just held on to it and just trailed pretty aggressively. But I should have just TP'd right when we hit this low. Again, I was like really greedy yesterday. I don't know why, dude. Just made some mistakes, but yeah, basically I had to close like around here because of the time of day. So I think I closed like around here. Yeah, like exactly right here, I'm pretty sure. It was like really late in the day. But I should have closed like right when this asset hit this low. So right when this hits this low, going NQ, boom, I should have closed right there. But I was getting greedy. I wanted to hold to like this low for some fucking reason. But anyways, or whatever low. But yeah, that's something I would avoid though. It's because it's super high in the range on a reversal day. Not something you want to be taking. Significantly lower probability. This is something I typically avoid regardless. So let's say we have a draw liquidity up here or something. Let's say it's not even a reversal day. It's like, let's say this is the daily open or something. I don't like to be entering way up here, to be honest. Even if the draw liquidity is like right here, I'd rather get in, off this manipulation here. Ideally, before we even hit this high, to be honest. Like, that's ideally how I want to see it. But there's some ways that it has to do with synchronization and correlation, but where you can enter those, but it's a bit complex and specific. Can you go over current price for NQ and expectation heading into the week, as I'm torn between retracement into weekly low? Yeah, so like Friday just ruins like a lot of things, like because coming into the day, like this is pretty one-sided bullish, to be honest. But this goes out the fucking window when like some war or like these random news events, they're not news events, but you know what I'm saying, these random events in the world that just affect the market. You can't have any control of this. This drop has nothing to do with PA to the left. Like tariffs, for example, has nothing to do with like the current PA or anything like that. It just like that's why higher time frame stuff is a bit hard sometimes, because it has nothing to do with like a candle 2 closure or anything like that. It just rips. You know what I'm saying? So like coming into the week or coming to the Friday, this is like super one-sided, bro. In my opinion, like you have a Thursday manipulation, I can expect this high or this high to get taken, right? Just from a weekly profile perspective. So I'm doing this as just consolidation. Why is it consolidation? Every time we get a high, we retrace deep in the range. You see that? This is a type of consolidation signature where every time we retrace, we're just leaving failure swings. You can't trade away from this with confidence, really. And it's obviously not a bullish market necessarily because it can't displace past the high. There's a couple ways markets consolidate. There's obviously the ones where it's just trading inside of a high or low. This is what everyone knows, easily identifiable. But there's like inside bar on a higher time frame, for example. If a candle stays in between the previous candle's range, high and low, this is a consolidation signature. Seek and destroy is another one that I feel like a lot of people don't know. But if you see this after an expansion, this is not a reversal signature. Typically, we'll expand again. What's another one? Oh yeah, this is the one that we have today, kind of like this. It's kind of just like very slowly fading higher. So your range low, your consolidation low is actually this. It's the relevant low. It's not any of this internal kind of stuff right here. It's kind of like the irrelevant. Think about relevant swings the way AM teaches it. So when we manipulate that, I'm doing that as, see, this is a relevant low here. The space between these lows. So when we manipulate that, I'm looking for SMT either with the relevant low itself or after the fact, and that's what we get. We get a two-stage SMT at the lows. This is an extremely clean PA, this day in particular. A plus, like the day opens lower, two-stage SMT prior to the driver. So what should the driver do? It should expand. So when it expands, super easy to take a trade like this. And this is an example, by the way, of like this day in particular versus like a day like this that you're seeing, because this is a reversal day, pretty large wick. But there's a big difference between the wick size here and like yesterday. This is kind of like a medium size. It's pretty large, but you can still like trade it lower. And especially if like the drivers, if you have a like an actual like manipulation, like, and the drivers are expanding away from that, typically you can trade to this high, you know, the max extension. But when it drops super low like this, like yesterday, it's really gonna have a hard time getting to there. Yeah, it's gonna be really struggle. But this is a day where like you can hold to like the current day's high. I held to this high just above the daily open, right, and then it struggles to get past it. But yeah, heading into the week though, it's like you just set in validations really. So I would view this as a failure to manipulate any of these lows, right? So ideally we just continue lower to like these lows or whatnot, you know. Not really this low, I don't really care about that low. But yeah, I would just be like bearish, but again, like it could inside bar, it's a Monday. What about this weekly candle? In a sense, we do have like this, maybe previous week's low, which is just Friday's low. So yeah, I'd probably view it that way, for sure. You can't really anticipate too much here. And the way I trade, like I don't try to anticipate too much on the higher time frame because of shit like this, dude. Like try to anticipate this PA sometimes. It becomes very hard. So I just go work off the previous day, the previous day's close, and what it did the previous day. Like that's how I anticipate price. Because half the time, price is not in a model, any sort of like internal to external or something like that on the daily time frame. So you're kind of just working off the previous day's range for continuation or reversal. I think it's a much more relaxed way to trade. You guys know me, like I am requiring a lot intraday, you know, for my framework to validate it because of stuff like this, like just PA in general in the higher time frame, in my opinion, can be very hard to like anticipate like long term, you know, just because of it's just gross, you know. So it's so much easier to just, in my opinion, if we're intraday traders, like I don't get my bias all from like the higher time frame necessarily. I have to confirm it regardless, intraday. So I get most of my bias or confirmation intraday regardless. So that's what I focus on. That's why you guys see me use like all this SMT and stuff drivers. It's because of that. If you're gonna trade every day without like a clear high time frame bias, because a lot of this stuff is not really necessarily clean in a sense, but I trade like I don't trade every day, but if you're gonna trade every day, you're gonna expose yourself to the market. You have to have like this level of filtering price, which I believe I do very, very well. If you're gonna require less intraday framework, well, then you have to require higher time frame framework like AM. You're just gonna have less opportunities. You just have to deal with that. What do you think about entry at 9:30 prior? I know what you're referring to. I don't really like it, to be honest. I think it's this little fractal that you're referring to. I think, right? 30-minute or some shit. Isn't it like just this or some shit? Yeah, it's just this. You're talking about the long, right? you talking about the long? Yeah, I don't like it just because I wouldn't even be trying to long this, like this little last move right here, to be honest, just because there's nothing really in close proximity to this high that you're seeing here, right? So like if we had like some high, like right, let's say this high right here was positioned like right here or some shit, like a lot more close, then I would do it. But it's just not going to have this expansive move past this high. So there's like no reason to like go beyond this high necessarily that I can really anticipate, because the daily range is already like the open is extremely far away, right? So it's not likely to go to the open, you know. So you trading towards that is a bit harder to do. Whereas like my trade, I did long yesterday, but it's just this. It's because it creates a like a level, right? So like price leaves this SMT here. It just goes from SMT to SMT. That's how the market moves. I can confirm that with strength switch to get this high. And that was kind of like my trade. But you see how like you have to be TPing at these areas because there's nothing beyond this. There's nothing beyond this high. It's very far away. So this is where you see your reversal here. And like I said, this is a form of, we already went over this, but it's a form of asset synchronization. We can go over some examples of this. It's very, very consistent. Do you require low return restrictions for entries when? No, so not always do you have to require a strength switch. It's specific. Is this with like RTY or something? I'm not really sure what that strength switch is with, bro. I don't think there is any, bro. I'm not sure what SMT this is that you're marking out, honestly. Do you pay attention to T2, T3 closures to analyze? Yeah, I do. For example, but I don't get blinded by it. For like, I know a lot of people were like bearish this day, but like you have a candle 2 closure, they're bearish, but it's like it did its job. Like this C2 closure, it expanded away from it into a relevant objective, which then we can reverse from, which then turns it into a bullish candle. You know what I'm saying? Or like this one, for example, like this candle kind of did its job. It traded back within the range. So what can we reverse from is that candle's low, which we actually form an SMT here. So you kind of have to like know when and where to use it. But this is a good example. Like you get a candle 2 closure within this range, for example. And there's an SMT here, so it makes a lot of sense to trade higher, you know. This is a really good week, besides like 2 days. But yeah, I don't just require like I don't like wait for candle 2 closure or nothing like that though. Release the slides, bro. I have a lot of slides, bro. So it's like I have a fuck ton, bro. So it's like I have like some saved, but I don't even know like where the hell to put it. Is this because of leakers, bro? YMSMT hourly chart. Yeah, I know that there's I just don't know what asset you're using that with though. Am I tripping? Like you marked this SMT or wait, what the hell? Wait. Yeah, I don't understand, bro. Because you're marking this when it took out this high. Like, I don't really get it. And all the other assets, they have this, it's 12 a.m. is the high, or 12 p.m. is the high. And they all took out whatever high you're marking out. So you're marking out this high, 9 a.m. All assets took out 9 a.m. high, so I don't actually get it. I'm confused. (4 a.m.) or 4 hour. Wait, what asset is this? Oh, is this silver or is this a oil? I think. Okay, if you're gonna trade oil, you would trade HO that day, because look how close this asset is to this high, for example. Look how far away this one is. And then you see the space between them? Like HO is way closer to these highs, right? See that? Versus any other asset. So there's a two-stage S&P here, right? And this is something that I've taught you guys. Do you see this lower here at 7 a.m.? So let's split screen because I know some people are asking me to do that. So mark that out, that same low. It's right here. So clearly the other assets failed to manipulate this low. So you guys already know. So I gotta go to my SMT slides. Hold on. All right. Where are we at here? Okay, here we go. All right, you guys already know if we fail to manipulate on one asset, like the SMT, then typically that means that this asset will catch up. What happens if we're just holding this SMT and there's no strength switch or like this asset like didn't manipulate, but we're still holding the SMT? You do not trade at all until you see a strength switch. Then this validates this SMT holding, right? So if you look, what I mean by that is you see how this asset over here, it's holding this SMT, but over here it's like we clearly failed to manipulate this low, right? But when do we actually reverse is a strength switch, which is shown right here, right here. You see that? And then I think this asset sweeps. Let's go to like RB or something. Yeah, so it's essentially right here. Now it's with a specific candle, but I'm not going to teach that. But yeah, this is really it though. It's just this right here that you're seeing. And this is why I would trade this asset in particular, this one, because it's just stronger. Sorry, my dog's like freaking dying, bro. Is there any way to trade like micro HO? When I pull up TV. Oh, really? I don't know. I haven't looked at micros. HO or RB. I've never looked. Let's use the, I guess minis. But this is a very low probable day though. Like, looking for continuation on any of the days that we saw yesterday is automatic low probability. When Asia expands like this, typically both sessions are going to be ass, you know? So like, really it's probably best that you just sit out that day, honestly. And if I am going to trade like a day like this, I'm going to trade like the indices because they're a lot more volatile. They're a lot more correlated. You have drivers. It's just like you can get, you know, smaller moves a lot easier. Or these ones will just kind of die out. So I didn't trade like gold or anything yesterday. Wait a second, trading QB 44 hour. Oh yeah, I'll show you why. So like if you already have this, if you already can assume that the reversal is put in for a 4-hour candle. If we mark out the opening price of 10 a.m. Like we mentioned, we had this here, and then once we get this SMT, that's the trigger for a reversal or a retracement, right? And that gets formed at 12 p.m. close. So this last hour, I should assume that this right here is the high of, what do you call it, 10 a.m. candle, and I can already assume that, you know, this retracement lower will just form the wick, and then the next candle can open up to continue. It's a little bit more advanced, but yeah. Like if you already form a reversal, like in that wick or in that, you know, time window of 10 a.m., then you know, I can trade away from that essentially. And I've showed you guys this as well. If you're gonna trade a reversal candle, you're gonna mark out the opening price to the reversal, and ideally you're entering in the upper half of that wick that you're assuming that could be created, because you don't know how far, you don't know if it's gonna create a wick, you know, past the body. You don't know where it's gonna close, so you need to be entering like high in that range because of that. Sorry if you guys can hear a freaking vacuum. Sorry. So annoying. Do you require candle closure to confirm SFT? On like the hourly and 30-minute, yeah. Let's say I'm gonna trade a C2 reversal, which I don't do often. Why did you already answer that? Can you please give us a few more examples on charts on top of the strength switching? Yeah, we can go over some examples. So let's go over this one. I also would be down to show you guys some examples of this as well, because this is something I haven't even taught you guys necessarily. I didn't put I don't have a stream on it. It wasn't in my SMT stream. It's like an extension of correlated markets, like and stuff like that. But it's kind of like an extension to SMT in a way. You guys want to go over some example of this, because it happens a lot. You guys are down. We can go over some examples. All right. So like I mentioned, when one asset sweeps out and fails to manipulate, typically this means that this asset will catch up. Now this is the perfect time to look for strength switching, so that this asset can become stronger to catch up to break this SMT that we're seeing. So this is when we really want to look for strength switching, is when an asset fails to manipulate. But this is when when we reach that high and break the SMT, this is a potential reversal sequence, right? And I only have 2 markets marked up right here, but we can pretend that there's a third market, and if that third market creates a divergence like this is very high probable that you're going to get a reversal. And I'll show you many examples of this, like this. So let's go over some examples. So we already showed you the multiple examples over here, but let's go to NQ here. Let's go to like some days that we're not really familiar with. Let's go to like this one, for example. All right, so this is a very good example here, I do believe. All right, so let's mark out the lows first. So go to YM, and I don't have 3 charts. I only have the plan that gives you 2, because I don't even use this stuff. But if we just look here by bar replay here, look at this low. YM traded into this low first. You see how it failed to manipulate, right? And now ES also failed to manipulate. But as soon as NQ trades into this low, price reverses. Sorry, this is like I need a black line. See, as soon as price breaks that SMT, does that make sense? Now we can do the same thing at the highs though. You see how NQ fails to manipulate the high, ES fails to manipulate the high. Or if I got like 15-minute or something, this is not manipulation, right? AM has a kind of like a way of viewing manipulation. When price trades so high, you want to see price expand lower, but when it starts to expand lower or trade lower and then it closes through the opposing candles that created that retracement, that's like a failure to reverse. That's how you can mechanically define it. But if these assets are not going to reverse at the highs, then what does that mean that YM should do? It should trade into the high, right? So when it trades into the high, this is a potential reversal sequence. And how do we know it's going to be a reversal? Well, strength switching is one of them. So as you see that this asset was stronger, but as soon as the weaker asset trades the high, you can just kind of see with candle closes. You can see that these lows, or let's just use the candle close. You see how it's a bullish candle? This is a bearish candle. So this one should be closing bearish because it's weaker. This one should be closing bullish because it's stronger. So that's a strength switch in itself. And I traded YM to get to these lows. So you still want to trade YM because it's the weaker asset overall. You always want to trade the weaker asset overall, unless you're trading a lagging asset. If you're trading a lagging asset that's confirmed, like you have a strength switch, then you want to trade that lagging asset because it's going to be stronger to basically catch up. So there's a difference. But this is what I traded to this low. So I just took it to this low basically. Does that make sense, everyone? Pretty simple actually. Hopefully that makes sense. But what else? Let's go to some more examples. What about this day over here? What about this piece of price action? You'll see how YM traded into this low first, did not manipulate it. ES traded into it like second. But as soon as NQ breaks this SMT or trades into it, this is when price reverses. So it says like the other assets are just waiting for the strongest asset to trade into the low, and this is when we reverse. We can do the same thing at the highs as well. So as you see, this 10 AM high on ES, 10 AM high, does not get manipulated. Does not get manipulated over here either. Bro, oh my god. So that means that NQ, when it breaks the SMT, this is a potential reversal sequence, right? So you're seeing at both sides of the market, right? It happens a lot. And this is just one of the ways. There's a couple of different like sequences and stuff, but we're just going to show you this one today. Does that make sense? If you are longing, do you want to trade the strong asset? Yes. So like the strength switch just confirms the reversal, but you don't want to trade the asset on the lower time frame that's switching to like the strongest one, for example. Like for example, like if you see this SMT on the higher time frame and this lower time frame strength switch bearish, I'm still going to trade this asset higher, right? Because it's stronger. It's stronger on the higher time frame. But it's a bit different when it's this. Right? If you get a strength switch in here to catch up to this high that already got taken over here, you want to trade this asset to get to the high. Does that make sense? Garrett, you know when to trade around. Oh, it's just framework specific. So you need like it depends. Like if you're going to like trade continuation, if I'm gonna trade like a positional entry where I'm like entering before a driver, there has to be a reversal prior to the driver. There has to be a draw liquidity open prior or still open to trade into. You know, those two things have to happen, and you have to be entering. If you're gonna be positional entry, it has to be like some very relevant area that the driver is opening near. Ideally. So if it's opening near like some 30-minute opposing candles, or just like a bulky series of opposing candles, maybe we took out a short-term low, like some like little protected level, maybe an SMT prior to driver, etc. Something like that. But we'll go over a couple more examples. So I love to use this on the higher time frame as well. So you can even see it like over here. If you go to daily, check this out here. So you guys see, let's go to NQ actually first. So you see this high over here. It gets traded into on Wednesday, but we failed to manipulate it. But when this asset trades into it, which is ES, this is when price retraces or reverses. And then on YM, we are creating a divergence, right? So the way this candle forms also confirms it just supports a bearish day, right? Because it's opening high first. See that? It's opening high first, putting in an SMT at the highs. See the high day over here on YM is 1 o'clock. Over here it is 4 o'clock. So that is obviously a SMT. And yeah, you see it on the higher time frame, but you also see it even down here as well. I do believe at least, hold on. Yeah, pretty much. You even see like on a micro level in a sense where like you see this lower here. Go on this asset. We traded, below this low a while ago, but as soon as like we wick this low on this asset, we have some sort of retracement. Now, would I trade this? No, because it's like PM session, but you can see like this is what the trigger for like reversal or retracements are. We can go over like plenty of examples. Let's go with like a different asset because it happens on all assets. So let's go to this higher time frame. So what about this? This high that got taken out. You see how this is a failure to manipulate? Because this is an inside bar, so this is a consolidation signature. So obviously, I don't care about this SMT that you're seeing with Euro. So when this SMT breaks though, this is a potential reversal signature. You see that? And that's why price reverses from here to get to this low down here. Does that make sense? Now we can even look at this example that I traded a while back. I just remember this example. So gold, the previous day, took out these lows. Did not manipulate them. What does that tell you? That this asset over here will break the SMT. So when it breaks the SMT, this is a potential reversal, right? And this is where we see strength switching. This is the stronger asset, remember? But then it's creating a lower low here, where gold is creating a higher high. Does that make sense? So yeah, you're seeing it pretty much play out everywhere. Pretty interesting. I'm trying to think of like if I even remember some examples. There's an example on like Euro. Pretty sure. So like look at this high for example, like those formed Monday. This is like you're gonna have to look at this on weekly time frame type shit. Because 21st of April. 21st of April is like right here. Or it's like basically this high. Clearly failed to manipulate it. When we reach it over here, we get some sort of like retracement, right? You see this retracement? You have an SMT that previous high here. To have that retracement. But you can also see it over here as well. This is another just retracement. So you see this high right here. The 26th of March gets taken out, but it got taken out a long time ago over here. So you know it's not going to reverse over here. You can even anticipate this failing because this asset was stronger because it's creating a higher high here. But now it's showing weakness, right? Where we're actually switching strength on the weaker assets to catch up to this high. This is one of my favorite things to see, to be honest. It's like free, bro. So you see that? And then when it breaks this SMT, we can retrace back into the range or reverse. You know what I'm saying? So it's very interesting, but yeah, you're going to see it's really everywhere. If I can refer to some examples over here, like just intraday stuff, I'm almost positive I remember. Like there's one yesterday, to be honest, like this one. See over here, we trade beyond this high, but the trigger for reversal is when this asset just wicks the high or breaks it basically. So at one time this was a SMT like down here, but as soon as it breaks, there's a potential reversal. Which on gold, I don't think this is a horrible trade to be honest, because it makes sense to cap off the weekly range from some sort of manipulation or daily range because it's already huge daily range and a huge weekly range. So seeing this here is also a strength switch here. You can kind of see it because this asset over here closes above these bodies, or just trades inside first. This asset does not close above these bodies. But you seeing this closure is bullish when it should be bearish. This one's bearish, so that's a strength switch. And you can trade these assets lower to potentially get to here. It just doesn't really get there. I just didn't like the lower time frame PA here. Like look here. Like these little candles, they're too small for me to like consider, to be honest. I don't really like these opposing candles. So yeah, but I know there's like one the previous day or like something. Where was it, bro? Gotta find it. I don't really remember, but was it in here? I don't even remember, man. I don't think it was, bro. I don't know what day it was, but you can kind of see here too, guys. Like, look. If you just look for this stuff, you're gonna find it. So check this out. Look when we hit this high, it's around like 2200 or something. But the same high over here, wherever the hell it is, pretty much this one, we did not manipulate it, but as soon as we trade into it over here, it's a bit weird because the high we're referring to is actually right here, but this is like unsynchronized highs. So what you're seeing here, this high over here, is like a lower low or like a higher or a lower high over here, but it's a bit weird. But you see that we clearly did not have respect for any of these highs, but as soon as they break it over here, so when we get some sort of retracement or reversal there. So is that version right there. What's another one, man? I think there is one here, no? Potentially. Nah, wait. Nah, there's nothing there really. Yeah, you kind of see it here though, as well. So gold trading to this low a lot sooner than euro. So at 2100 we trade into this low. But over here, oh no, that's the same time. I'm tripping. Oh yeah, I'm tripping there. Sorry, that's nothing. Oh, I know there's one like over here. I'm pretty sure it's like internal though. It's a bit whack. It's a bit wacky. So check out this lower here that you're seeing. 2100. Go on like these assets over here. 2100 got taken out at like 6 o'clock. And 2100 over here is very. It's like way over here. It's pretty. I wouldn't even consider this, but euro, it got traded into at 6 o'clock. But over here, 6 o'clock did not take it out. This is a 6 o'clock candle. But as soon as you break that SMT, is when you get some sort of like reversal, right? And yeah, what time is this? 7 o'clock. 7 o'clock. Yep, there's a Tuesday SMT there as well. So that's interesting. So yeah, it's something to look out for sure. So trying to find more examples. Here's one right here. So check out this high, this low here got taken out at 1900, but this same low clearly did not get manipulated. So like we already know the S&P is going to break, right? We already know that's going to break, but when it breaks, this is a potential reversal signature. You see that? Does that make sense, hopefully? We trade into, I'm trying to just look for like more examples like really quick. These are not correlated at all. Let's like look over here, some shit. I think I'm seeing something here. Yeah, so check this out too. Oh yeah, I traded this because of this. I remember this. So this is a very clean trade. So the weekly open is like right here. This is the weekly open. So it's like we have a bunch of highs above, and then Monday consolidates, which creates a relevant swing. So when Tuesday manipulates it, this is a potential reversal point, right? It's just Monday consolidation, Tuesday reversal off of Monday's low. But you see Monday's low here. The other assets trade way beyond it. Technically, it's like right here. This low that you're seeing on gold, which is midnight low. Here's midnight low over here. Clearly failed to manipulate it. Over here, Monday's low. Clearly failed to manipulate it. But as soon as it breaks that SMT, this is when the assets reverse. And this is where you have an SMT here. This is what I traded. So see that? So yeah, you can even see it like right here as well, like on the lower time frames. So you see like over here on euro, we did not manipulate this low because we traded into it. We came higher in the range. We trade into it. We're just creating lower lows here. But on this asset, it's like basically as soon as you break it, damn near, you reverse. Just waiting for a candle close, and then it reverses. See that? See, it's like fractal, but yeah, we'll go over like in the future like how to really use it. But yeah, it's interesting. And there's a couple other ways and stuff like that where markets will resync. Fair to say that many times reversal becomes more obvious when lagging as it goes up and becomes. Yeah, pretty much. It's not really wait, fair to say many times a reversal comes more obvious. Yeah, pretty much. It's the lagging asset like breaking the SMT. It's like catching up. Could you maybe like next week do a backtest session where you use this SMT stuff like Tuesday? I feel like those streams. Yeah, yeah, because I don't think I introduced all the SMT stuff last time I was backtesting. Don't think so. Have you ever considered opening your? Nah, maybe one day. Same question as Fabi. Fabi, did I miss that? How do you know if it's going to take the high or if it's going to create an SMT? Well, it goes back to my first stream, right? Hold on. Goes back to my first stream. So when we create an SMT like this, regular highs and lows, we're waiting for the first thing we look for is obviously a candle closure because markets cannot reverse without a candle closure. But most people, they look at the asset that creates a lower low and they don't even pay attention to this asset. But you need to flip that. You need to be paying attention to this asset because if this asset does not reverse, typically this will not reverse, right? In order for markets to reverse and expand, they need to be correlated, right? So this is where strength switching comes in because ideally we want to see the asset swept switch strength, right, to confirm this reversal, right, to catch up to this asset, right? So ideally you see that. This is where I talk about strength switching, blah blah blah. This is where like all the two-stage SMT comes in that I introduced to you guys. This is a form of strength switching, by the way. Like this two-stage SMT, it's the stronger assets momentarily switching to the weaker asset to catch up. That's all that is, you know. But when an asset does not reverse, it does not expand away after the manipulation, this is typically when this SMT will break. That's how you know it's fake, right? But if you see a strength switch at the SMT, that's how you know it's real, you know. So that answers your question pretty much. Can you elaborate on confirmation of SMT triggers when we cannot only spot but also confirm them on 1 hour to closure, strength switch on lower time frame? Do you confirm they are valid? And what are the time frames you use and the lowest? The lowest I'll go, so like I'm just using SMTs on like daily, just for like higher time frame stuff. It's like daily, weekly, like highs and lows as far as like just higher time frame. And also use like previous days highs and lows, previous weeks highs and lows. You should just study that. But another thing, like just for intraday confirmations, like to form the high and low day, you guys know I use 4 hour and 1 hour key levels. So just start focusing on highs and lows because that's the best PD area, right? Or like reversal point, I guess you could say. Start focusing on highs and lows, and you want to look for SMTs between those 4 hour and 1 hour key levels or swing points to form the high and low day. That's where you look for SMT. And then you can go on the lower time frame. Like it's just like standard time frame alignment. Like you can just view that on like the 5 minute or something. Just taking out like this two-stage SMT for example. Like this can be like an hourly high or something, and this can be the 5 minute time frame that you're seeing. So like you get that strength just on the 5 minute, for example, right? But yeah, there's a couple different ways there's a couple variations of two-stage SMT. I can't talk. Or strength switching, which I cover most of them here. Like if you look here, I cover most of them here. And those are things you want to be looking for. But yeah, there's no like standard time frame alignment, I guess, or like time frame you confirm the SMT on. I guess just stick to the fractal model. So just stick to like if you're looking for an hourly swing point, just go to 5 minute. You know what I'm saying? Don't overcomplicate it. So if an asset trades into a higher low on a different time, that is also considered an SMT. even if they both take it out. Yeah, at one point it was, right? Yeah, because if you have a high, for example, and this asset trades into it, this asset looked like this. At one point, this was an SMT, but this asset disrespects this SMT. This means that this asset will also likely disrespect it. And when it does disrespect it, this asset might be like way up here, but this asset can reverse, and this one will also reverse or retrace, etc. Right? So we'll go over some more examples on like CL or something. I think this is a really good example to show. What the fuck happened here? Oh, never mind. I thought it was yesterday's P. I was like, I do not remember it looking like that. But if you go over here, for example, just start paying attention to the swing, like the reversals in the market. So, what about this one? What do the other assets look like at this point? Look at this low, 23rd of May. We clearly disrespected this low. Clearly disrespect this low, right? But as soon as this asset trades into this swing low, this is a potential reversal, right? So we're really paying attention to this asset that is the strongest. So when it trades into the low, if it's the strongest, then it's most likely going to reverse, right? So if you look here, this is when it reverses, right? And you can even see this. So why would we assume that this is a retracement? You're going to see right here. I remember this day. And you see that this is a retracement. How do you know it's a retracement? Because it's just leaving behind these equal highs. Market's not likely to leave those behind. So it's like, what could cap off a retracement? Counter trend is a fair value gap or a relevant swing, right? For example, like this. Like I want this to cap off the retracement, because if you just fail to manipulate this swing and continue lower, then I can maybe trust these highs to trade away from to get to this low or something. But until then, you know, you really have to. It's really important how we react here. Very, very, very important. But you're even gonna see right here. Fuck it, we can even go to the highs actually. Go to the highs real quick. Go to like HO, I think. Wait, which high is this exactly? So the 10 o'clock high yesterday clearly did not manipulate it, right? Clearly did not. But as soon as one of the assets trades into the high, or both of them, this is when we can reverse. This is a form of strength switching as well. Because look right here, creating a higher high. Over here, creating a lower low. So I don't even teach you guys this because this is going to confuse the shit out of you. And I didn't even, this is a addition to this, by the way. But I'm telling you, it gets a little complicated. And this is like, dude, it's a bit confusing, but that's what we see here. This is a form of two-stage SMT. And if you just logically think about it, this asset was stronger, right? Because it closed above this high, hit this high way before CL did. But now it's switching bearish, as you see here. So that is, automatically is a strength switch, right? And that's what we see here. As soon as you break this SMT, that's what trades lower, right? And if you go to RB, we're creating an SMT there. So what you're seeing here, I only have this version and 2 assets, but I need to add to this slides in general. I just made these pretty recently, so I have to add like 3 markets. I have to make slides for what I just showed you there and whatnot. But if you look here, let's go to the hourly chart. This relevant low that we saw on CL, what are we noticing? That this asset RB traded into this low at 10 o'clock and failed to manipulate it. But as soon as this asset traded into it at 11 o'clock, within the 11 o'clock candle, when you break that SMT, this is the trigger for a reversal. You're going to see with the other asset creates an SMT. So it's the same thing you see at the highs here, right? See this SMT here? And you get a strength switch because this is called hidden SMT. So it's not with a low, it's with the body that basically is like above the low or created the wick or whatever, right? So you see this body here, we close below it, and over here we're closing above it. Remember, this is the weakest asset. This was the weakest asset. So you almost have to view this as a two-stage SMT, like a strength switch. And that's why you see all markets expand higher. So I did not trade this day, I traded this day, I traded this day. I did not trade this day. What else? But yeah, that's there's that, right? There's another example here. It's everywhere. So what about these highs, for example? go to like one of these other assets, we clearly fail to manipulate this high. But as soon as it breaks, this SMT, we reverse. Now go over here. We have an SMT here. So see how you really have to view markets through a triad, and there's nothing even remotely close to the precision that you can get with this stuff. I promise you. It's probably extremely hard to learn. Like it's very, it's really hard to learn because you're trying to learn within like looking at like multiple assets. That's like hard as shit, and it just gets very deep. So, but I promise you guys, like, there's nothing better. If you go to the lows, man, like look. I think we saw the lows if I'm not tripping. Yeah, like look. This low over here got traded to 6 o'clock, failed to manipulate it. As soon as this asset trades into it, what else do we have here? An SMT. So you're seeing the same thing like back to back to back, like in all the same structure. Like this is not no, I'm not just like showing you guys stuff. This is like no like theories or anything like that. It's like look at how the market moves. It's pretty cool. What else? Right here. Go over here on HO. This same low, or wherever this low is over here, clearly do not manipulate anything over here. This asset, I think, holds this SMT. But as soon as I break this SMT over here, is when we have some sort of reversal. Right? Does that make sense? Or a retracement. Either or. I even think like over here, I was going over this with a student. I think, I just remember this shit. Like we trade into this high over here at like the 22nd. Over here, the same thing. We do not manipulate this high. But as soon as you break it over here, we have some sort of retracement reversal. So just go back in price and like look, just try to find these things. They'll blow your mind. What about over here? No, I don't think. Did we not take this low up? Oh, there's SMT there, okay. But yeah, it's pretty interesting, guys. Pretty cool. Like if I had a way to show you guys in like a structured format or like a course format, I'd have to talk to AM and T, but yeah, I would change the game. Okay, so we see it, how to approach it. Oh, how to execute. It's just like anything. So it's like as soon as we hit a high, like does the daily profile support it? Is there a SMT there? It's the same, literally same process. There's literally nothing that changes. Oh, okay. Asset 1, asset 2. Okay, bet. I went mute. Can y'all hear me? Oh. Why are they saying that? Oh, it's just like their stream. I did? What the fuck? I didn't mean to. What's my end goal? For what? For like trading or education or just life? What else, man? What else? Pretty much at an hour here, but I think I was like marking some stuff up over here. Got deleted. Shame. Oh, what stream was it, man? Fuck. I can't tell you the exact date, but I have a YouTube video. It's the same shit. Literally, I covered the same thing. So if you go on my YouTube, it's probably easy to find, honestly. trading in general. What are my goals for trading in general? Man, I don't even know, bro. Like, don't know. Um, I mean, pretty much. Yeah, I don't know, dude. Nothing too crazy though. I don't know. I enjoy trading. So a lot of people will say like their end goal is to like get off the chart something, but I actually like trading. So it's like I don't really know, man. How long have you been trading for? Uh, about 6 years, I say. Yeah, around 6 years. Yeah, I don't really have a goal in trading like necessarily. Like I don't really. It's a bad thing. I don't really look too far ahead. Like I really don't. I never worry about the future too much. I don't know, dude. I'm like a very in the moment type of person. So like I don't even know. Like I don't even know what else is there to like do really. Like I don't know, dude. My goal is trading to blow up and act like that's crazy. Yeah, I don't know, dude. How long? It took me like 4.5 years, 4 years to become profitable, some shit like that. Because I wasted like 3 years on like supply and demand, you know, supply and demand. What is the other ones like support and resistance, like smart money concepts, stuff like that. Didn't really work for me. It was always it was always the bias, man. I could never have a bias. Like no one ever taught like a repeatable logic, and that's what just threw me off. I could never figure that out. And I always knew of ICT, but I was one of those guys that, like didn't know anything about him and just hated him. I don't know why. It's because like everyone in my space just thought ICT was you know so I just went with it, but I never gave it a shot. And I never really learned ICT from his YouTube, but I stumbled across T Trade's YouTube channel, and then I just started learning from like him and MXM Trader, and really it was just a bunch of back testing. Like that's what really did it for me. And I pick up things from here and there. So it was like a year and a half of like ICT just studying and stuff like that, and then yeah. But even like when I made my first dollar, you know, as a trader, have improved so much from just then. You know what I'm saying? So the learning never stops. Like seriously, it never stops. A lot of people say like I kind of agree with this, but I kind of don't. They say like once you have a profitable system, like you don't need to change anything, but it's like you can always improve, in my opinion. Where I've been trading 1-3 micros, thanks to your model, I have found consistency. I appreciate your education. But my question is, when do I know I'm ready to size up? Well, if your results show that you're consistent enough, then yeah, you can start sizing up, man. Just let your data talk for you. Your data should make that decision. Don't go off like emotions. If you don't need a job because of trading, what more do you need? Yeah, exactly. It's like I don't even know what a goal would be, man. It's like yeah, I don't know, dude. It's because once you yeah, I don't know. I don't know. I guess make more money. I don't know. I really don't know. Yeah, ICD is kind of hard to listen to. But my videos are just as long, dude. Like honestly, I can't even talk, bro. My videos on YouTube are like super long. I just can't. I don't know, dude. I cannot explain things in like 10 minutes because like I like try to go in detail. You know what I'm saying? I don't know. I cannot freaking do that, bro. Is there a stream recording of how you back? Yeah, there's like 2 streams of me recording back testing. 2, 3, something like that. Oh, I guarantee you, if I was learning from ICT directly, I don't think I would be profitable. I'm not even fucking joking. Anyways, I'm gonna end this stream here, and then I'll just continue to talk.